Welcome to Mindful Management, Creating a Trauma-Informed Work Environment, a podcast by Chefalo Consulting, where we share the knowledge, stories, and resources you need to create a trauma-informed culture that supports wellness, growth, and resilience. I'm your host, Shenandoah Chefalo. Welcome, everyone. So excited that you're joining us for another episode of today's podcast. Today, we are diving into a topic that I'm super excited to tackle, mostly because everyone says it's one of the three topics we can't talk about, but I think it's one of the ones we have to talk about. And so today we're going to be looking at financial trauma, financial equity, and some special programs that our amazing guest has been involved with. So on today's episode of Mindful Management, Creating a Trauma-Informed Work Environment, we are delighted to welcome Dara Duguay, the CEO of Credit Builders Alliance and a trailblazer in the realm of financial empowerment. She has decades of experience and has dedicated her career to advancing financial equity and addressing financial trauma through innovative educational programs and partnerships. At Credit Builders Alliance, she leads efforts to bridge the gap for individuals with poor or no credit history. And something I'm so excited to talk to you about, Dara, your initiatives around the child welfare system and some of the work that you've done there. Dara's work not only seeks to transform personal financial management, but also to instill systemic changes that support the most vulnerable. We know we're big supporters of systemic changes around here. So join us as we explore how her leadership is making a profound impact on communities and dive into the critical conversations about financial trauma and equity. Dara, welcome to the program. We're so excited to have you today.
Thank you so much. I really appreciate the invite.
And we love it. Did you bike to work today?
No, actually, I biked yesterday, but I had a reception to go to and it was dark. So I walked today, but I will bike back. Yes.
We love supporting climate, right? Like this is all the things we can do on an individual basis. So Dara, throughout your distinguished career, you've championed financial empowerment from multiple angles. You've been involved in this area of work for a long time. Is there a pivotal moment or a project that really solidified your passion for financial literacy?
Well, I would say when I got into this field many, many decades ago, I got in through credit counseling. I ran the education department at Consumer Credit Counseling Service of Los Angeles. And after I worked there about 7 years, I was recruited to move to Washington, D.C., where I am currently. And I was the first founding director of a coalition that still exists. It's called the Jumpstart Coalition for Personal Financial Literacy. And back then, like financial literacy was not a phrase that anyone knew what it was. Well, when people asked me what I did for a living, I would say, oh, I'm working on financial literacy. And they would say, oh, it's really important that kids learn how to read. And I would say, yes, that's important, but that's not what financial literacy is. So fast forward to today, I'm most proud of the fact that something that was unknown, right before the turn of the century, literally unknown, is now a movement. It's a movement. I mean, my organization now is an alliance of nonprofits, 650 of them all across the country. And they all work on financial capability. They hire people that are financial coaches and counselors, and that type of ecosystem never existed. And taking it globally, you look at the fact that I think the United States was one of the forefront in this movement, but now globally, there's all kinds of conferences at the OECD and movements and bodies. Different countries have their central banks or other entities that are leading these efforts. So I'm really the most proud about that. It turned a concept into a movement.
Yeah, it's amazing too, because again, this idea of financial, right? Like religion and politics, we're supposed to not talk about it. And there's so much going on around it. So can you explain through your lens, what is financial trauma and what is that impact both on the individual and community level? And perhaps, what does Credit Builders Alliance do in addressing that issue?
Yeah, well, I mean, I've had financial trauma in my own life, as most people have. And I certainly saw the results of financial trauma when I first entered this field. And I used to sit in on credit counseling sessions where there were people that would arrive, and this is back in the day before Zoom counseling, right? So it was physical counseling. And I would sit in because I wanted to find stories. And even though I was leading the training department, the best way to get people to remember a message is to embed your training with stories. So I would sit in on these counseling sessions to do just that. And that's where I really saw the financial trauma. That's where I saw marriages, turning into divorce. That's where I saw people in all kinds of emotional states and crying and not sleeping, and the stress creating health issues. I mean, all of this goes back to the power of money, right? Or what happens when you have lack of money, right? And lack of money, and it affects so many things. It affects, are you evicted? Are you ruining your credit report, which has long repercussions? Most negative things on your credit report stay on for 7 years. A Chapter 7 bankruptcy stays on for 10. So these types of things are serious, right? And so it's not just something you can sort of laugh off. It's very serious consequences with serious health results.
Yeah, and I think that's maybe the most scary part that, from the trauma-informed lens, we don't maybe pay as much attention to is this financial trauma piece that's really playing in the background for most people. Now, you and I have talked about quite often just this idea of poverty and the kind of misconceptions that in the United States, especially, that people in poverty aren't working or for some reason are just trying to suck off the system. And I think and I know that actually quite a few of the people in poverty, if we exclude children, which make up a big section of people in poverty, but if we talk about adults in poverty, are working Americans. Like they're working folks who are still struggling in the day-to-day aspects. So what are some of the, kind of talk about that as my question leading here. What are some of the other common misconceptions about financial trauma and maybe more specifically financial equity that we sort of all can pull ourselves up by the bootstraps and live the American dream, if you will, that you encounter in your work? And what do you see as Credit Builders Alliance's role in maybe correcting equity or even talking about financial equity?
I would say, first of all, building off on your comment, the vast majority of clients that our members, our nonprofit members serve, tend to be low to modest income, persons of color, persons with no credit history. These are people that don't need a budgeting 101 class. Like, they do not need to be taught how to budget. Usually these people know where every single dime is going because they have to be very, very, very mindful of where they're spending money because there's so little of it to go around. Most of these people too work multiple jobs because the wages aren't high enough to actually afford things in life. So absolutely, that's a misconception that people that are in poverty are just not trying hard enough. And then I think one of the other sort of themes that we see among the people that our members serve is that their financial lives are lived outside of the credit reporting system. So for instance, if you go to a pawn shop, if you go to a payday lender, if you go to a rent-to-own shop, if you go to a check casher, none of these, industries on a regular basis report to the credit bureaus. And for you're having all these financial transactions, but it's not assisting you because it's not ending up on a credit report. So most of these people end up as what we call credit invisible, meaning if a financial coach or if the consumer themselves pulls their credit report, there actually is no information there. And why is that important? That's important because the credit report has become sort of ubiquitous. It's everywhere. It's not just something that's used for determining whether you can get access to a loan, or if so, like an auto loan, like what interest rate are you charged? Is it 32%? Is it 5%? Based on your report. But the credit report now is also used as part of tenant screening. So if you're trying to rent an apartment, It's used in 50% of the states in employment. And also, based here in Washington, D.C., our local members tell us that they have many clients that come in a state of utter panic that work for federal government agencies such as the State Department. And they're given, a certain amount of time, usually not enough time to do anything about it, but, a short period of time to get their credit score up to a certain point, or they're going to actually lose their employment. So that's why, it's so important to get people that are credit invisible into the credit system.
So another thing that you mentioned in there, and here's where I have all these great questions for you, and then I get intrigued by something you say and want to go down a rabbit hole, is that credit invisible, but also the cost of that, right? Because if you can't open a bank account and you have to cash your paycheck at, and this is from my own story, my own personal experience, of course, in the foster care system, is the cost of cashing my paycheck and going to the local check cashing place where, you didn't have to show ID or anything. And so they would just cash it, but there's a fee to do that. And it's actually a percentage of your check, which is quite expensive. So that also, when you're credit invisible, when you can't open a traditional bank account, which, I got denied as a 16, 17, 18-year-old young person from doing, I think a lot of people in our society don't take that into account. To your point, when we talk about the budgeting, like, oh, just don't buy a coffee, or you shouldn't have a Netflix subscription, right? That's such a place of privilege to even say that, from assuming that people are even have the money to do those things in the first place. But the cost of being poor, the cost of this invisible credit, so to speak, that exists is really predatory.
Absolutely. And we always say that those that can least afford to pay the most. And in many cases, you don't realize it. So if you buy a TV at a rent-to-own shop, you don't realize that these small little monthly payments that you're making, actually over the period of time that you're repaying this TV, you could have bought like 3 TVs that are the same for cash. So yes, it's extremely, extremely expensive. If you look at someone who gets an auto loan that has, a subprime credit score, they're going to be charged so much more than someone that has a good credit score for that same vehicle. So yeah, it absolutely adds on all of these additional costs.
So can you speak then to the intersection, and you kind of briefly touched on it, about financial equity and social justice, and how do those principles maybe integrate, and what do you see as your role at Credit Builders Alliance and moving that discussion forward?
Yeah, I'm going to quote one of my good friends who I've known for decades, John Bryant, who's the CEO of Operation Hope, which is a financial equity force in this country. But he said, there's never been a riot in a community, with a 720 credit score. And if you think about it, it's people that have the privilege of having, a strong credit score, people that have the privilege of having an emergency savings account, people that have the privilege of having access to credit so that when the car breaks down or their air conditioning unit goes out, they're actually able to pay for it on credit. That's very different than people that don't have access to these things. And people that don't have access to these things, it causes all kinds of stress. It causes all kinds of grief, chaos. You name it. We have very consistently had listening sessions where we ask our members to recruit their consumers. And during these listening sessions, we specifically want to recruit people that are unbanked, credit invisible, or have bad credit, and really ask them about their lives. And there's a couple things that we find. Number one, other than the obvious stress if you're having financial problems, is the amount of time that is occupying your life when you're having to go in person the last day to the utility company to pay the bill before they turn your utilities off. The amount of time it takes, to go to a check cashing institution, instead of doing online banking. Just the amount of time and effort, and it's your thought process too. We've also asked this one question often, which builds upon a Federal Reserve study of many years ago, but it's always referenced. And they ask the question, what would you do if you had a $400 emergency expense and you didn't have access to credit? And we ask this question every single time there's a listening session, and the answers are always the same. It doesn't matter where we ask the question, to what demographic, to what race, to what geography, in what state. The answers are always the top two. Number one, people would ask family and friends. That only helps if your family and friends are, wealthy. And we find a lot of times people, that are in poverty or in low income, their family and friends tend to also be in that same, socioeconomic status, right? So they may want to help you very much, but they can't. And then the second thing that people say is they would sell something. And so that's why you see, like I remember I live downtown in DC, and when the pandemic started, there's a pawn shop in my neighborhood. And one day after, a couple weeks after everything shut down, I was walking the dog and I saw like this enormous line, and I wondered what it was. And it was a line to a pawn shop. And people that had been laid off, right, and that needed access to money were selling something. And so, those are the top two answers of what people would do. So that's pretty stressful, right? That's extremely stressful if you're needing access to money, you're running around your house wondering what you can sell.
Dara, as you think about that, and by the time we air this episode, we're going to have somebody new in office in Washington, D.C. And I'm sure it's not an accident that Credit Builders Alliance is located in Washington, D.C. So are there some policy changes or initiatives that you believe are needed to advance the conversation around financial equity at a broader scale?
Yes, there are many things that are, sort of in process, conversations happening, pilot programs that have really proven to be very successful in reducing this sort of wide gap that we have in financial inequity. Let me mention just one that Credit Builders Alliance has been working as a part of for the last decade, and that is rent reporting. We specifically work with affordable housing providers, but rent is not something that typically shows up on your credit report. But there's more renters than homeowners in this country, right? And most people that are renters, that's the first bill that they pay. They need to pay that. They don't want to be evicted. But you're never or rarely, getting that rent to show up on your credit report. So about a decade ago, Experian was one of the first credit bureaus that allowed this trade line, as we call it. Now all three of the major credit bureaus, TransUnion, Equifax, allow it. And so there are many fintech companies out there. So for anyone that's listening to your podcast, they can go to a fintech such as Esusu, ESUSU. We also have a great link to all these fintechs that I will share with you and you can share with your listeners. But people can sign up. It's usually, if there's a fee, it's minimal. Self Financial also has a rent reporting initiative where there's no fee at all for the consumer. But what this allows is that your rent payment to be reported to the credit bureaus. And so it helps people just start to create a credit history. The good news is it's much easier to build a strong credit history if you have no credit than if you have really bad credit. If you have really bad credit, like you didn't know anything about how to use credit, you made a lot of mistakes, you paid bills late, and then all of a sudden you have this really, subprime score, 480 or something, that's much more difficult it's very incremental in actually improving that score versus if you start out with no score, you're a young person, you're new to credit, you're an immigrant, you're a refugee, and you're just starting out. We have found consistently that if you pay on time what we call trade line, so whether it's a credit card or a student loan payment or in your rent, if you pay that consistently, after about 6 months of time, you could have a credit score in the roughly 650 range, which is just getting you into what we consider the prime category. So that's the good news. That's the good news that yeah, if people don't know what their credit score is or what's on their credit report, they absolutely need to pull it. They need to go to annualcreditreport.com. And if you can also share that link with your listeners, that would be fantastic. The reason to take a look at it is to see, are you credit invisible? And also, are there errors there? If there's legitimate errors, there's a dispute system where you can get rid of them. You may find that there's fraud, especially for those in the foster care system. Unfortunately, there's lots of fraud, primarily by those that are their caregivers or relatives, which is so sad, and also illegal. And so if that's the situation and you discover that, we also have a wonderful website that is specifically for those that help those in foster care.
I want to talk to you about that, Dara, because I think that's one of the things you talk about when you're talking about young people with subprime scores, right? With lower scores. And this was, listen, I'll be completely transparent. This was the case for me, especially aging out of the foster care system, is I had zero financial literacy. That wasn't a thing. We didn't talk about that, Dara. You kind of mentioned that at the top of the hour here for us, is that it wasn't even a thing. No one was even consumed with this idea of financial literacy when I was that age. But I remember going to try to buy my first car and they were like, yeah, no. And I was like, what do you mean? I have this job and I've never had any credit. And then they proceeded to hand me a copy of my credit report, only for me to find out that lots of people had been using my credit, right, throughout my foster care experience, and had been getting credit cards and all kinds of things in my name and not necessarily paying them back and not even knowing who or where in starting that. So can you talk about that program that Credit Builders Alliance has been involved in and supporting children in the child welfare system and helping them to build not only their credit, but financial literacy around that? Because I think it's so important.
Yeah, so we got involved in this whole foster care initiative because we worked on a grant really closely with a nonprofit that's wonderful called Child Focus. In just a side conversation, the head of Child Focus was wondering if this federal requirement that passed some time ago, if it was actually being implemented. And this federal requirement is that all the child welfare workers that are working with a foster care youth, they must once a year pull their credit report. And that's specifically to see if they can identify fraud. And then if they do, they need to go through the process to dispute it and help them to get that removed. We found out that it's not really happening across the board. Some states are doing it better than others. And so we developed this one-stop shop website for those that are child care workers, but it really is really for anyone. And we have very specific directions about how to dispute things that are wrong or things that are illegal. And it's very instructive to help people that, maybe personal finance, credit is not something they're familiar with, but all of a sudden now they're responsible for, right? And so it's a fantastic website. And we really feel that if you can identify for these young people these instances of fraud, you're going to help them because you'll be able to remove it so that they won't have to start their financial lives at a disadvantage.
Right. So just trying to get them back to zero, right, versus starting in the negatives, which is so, so crucial. So for our listeners, we'll have links to all these websites that Dara's talking about, including to this child welfare program specifically in our show notes. So be sure to check those out as well. Or if you're driving or doing something else, you can circle back. They'll always be there for you. So Dara, we always end on some quick fire questions. But before we get there, you have a real global experience when it comes to financial trauma and financial health. What do you see as you're kind of looking forward into the future, maybe the next 5 to 7 years? So a little short-term future. What are the Credit Builders Alliance's goals for expanding the impact of areas of financial trauma and equity? What do you see on the horizon for you guys about where your focus is moving?
Yeah, there's a lot of promise in what we call alternative data. So, alternative data are things that most of us have to pay but are not reported to the credit bureau. So, these are things like utility bills, your cell phone bill, your electric bill, things that most of us pay on time, but we don't get credit for. And so there's a big movement to start to include those pieces of data so that it allows people to get credit, for paying these types of non-credit, instruments. And then there's also a big movement to also look at bank data. So not just looking at a credit report when you're trying to ascertain whether someone should get, a loan or not, but also taking a look at bank data, which shows a lot. It'll show if there's consistent deposits, for instance. It'll show if, the account is not overdrawn. So you can get a lot of information from bank data. And so for people that are unbanked, you can easily, maybe not easily, but you can certainly survive, without being banked. But if you are banked, you're going to be paying less money in most cases. And there's a lot of banks out there that have, checking accounts that are no cost, that are sort of entry-level accounts. And so I really encourage people to try to find those institutions. Credit unions are usually a great place to also seek, and to try to get into more the traditional, financial institutions. And if you can, it's just going to help you save money, actually. And many of them also, have really good financial education programs themselves. One of the issues that we've found is that traditional banks tend to have their financial education on their website, and it's really robust and they spend a lot of money on it. But we've found that the vast majority of people in our listening sessions that we talk to do not get their financial information from a bank's website. They get it from TikTok, which is very frightening. When I first discovered that was like the primary source of credit information, I asked my staff to take a look and to try to find out who are the biggest influencers in this space. And then listen to some of what they're saying. And credit is very nuanced, and credit reports and credit scores are very complicated. We have a whole training team that actually trains our practitioner members on this because it is so complicated. So for people that are not skilled and just saying, well, if you do this or do this, it'll help your credit or it won't. Like in many cases, like it's wrong information and is misinformation, and it's actually making someone's situation worse. So that's my caution.
Influencers sometimes give us bad information, Dara. You can't believe it. So that kind of ties me into a question that I want to ask you, which is, I know many of our listeners have financial trauma. Many of them have overcome it. Many of them are still struggling. I work in sectors where people are doing really good, amazing work and aren't being paid what they should be paid for the work that they're doing. I'll be the one to say it because I know they're not. And so I know many of our listeners are struggling. What's one piece of advice you would offer to individuals who are trying to work towards financial empowerment?
Don't give up hope. The thing about money is that it's consistently coming in, and you can always change your situation. If you don't understand about money, there are so many wonderful materials out there. As I said, I used to run the Jumpstart Coalition. The Jumpstart Coalition has a wonderful clearinghouse of materials specifically for youth, but that's where you should start, actually. So if you have kids, there's actually financial education out there as early as preschool. The more that you can teach people, the better. I've seen people all the time that have turned their situation around. I grew up in the Midwest. My parents didn't have a lot of money. They were the product of the Depression. Both of my parents grew up, and their parents lost everything in the Depression. And so my mom was always saying no. I would say, can I have that? No. Can I have that? No. And after I graduated from grad school and I got my first credit card, it was like really like liberating, right? It was like no one was saying no. And I just, went nuts, and so I like had so much debt on my credit report. And ironically, around that time, I was hired by Consumer Credit Counseling Service to, which I think is so funny now, but I was hired to be the director of their, education department. And I was terrified they were actually going to pull my credit report before they decided to hire me. Thankfully, they did not. But, through learning myself, through giving these trainings, I actually was able to pay down my debt. I was able to learn that the worst thing in the world you can do is just make only a minimum payment. Although that's all you have to do, it's actually the worst thing to do because then you're paying all this extra money and interest and so forth. So I would say, like, don't give up hope. I've seen people all the time, even people that have filed bankruptcy, that turn their situation around.
I love that message, Dara, because aged out of foster care into homelessness, right? Like I started with negative credit score. I worked very low paying jobs for a big portion, and hope was so crucial. But I've always said the finances isn't my strong suit. It's been one of those things, math and finances. It's why I went into the kind of work I went into, right? And then COVID happened. And I thought, I'm kind of sick of saying this about myself. And so to your point, there's so much available. Now, part of having so much available is there's sometimes also not a lot of great stuff available, and you kind of have to dig sometimes. But the one thing I said was, I just want to know more about the stock market because I feel like I'm an idiot. And I have been amazed with the help of YouTube and a lot of trial and error, how much I've learned in a very short amount of time. And so I think that piece about hope is like, we also live in a day and age where for free, you can really learn a lot if you just want to put that. And I think you're right. You can really turn it around. And I would tell you, I went from, I know nothing to like, oh, let me look at that company report. I think I can figure some things out. Right. So I think there is hope for a lot of people. Just appreciate you, Dara, what you're doing, what Credit Builders Alliance is doing. You got a few seconds? We'd love to ask you some quick fire fun questions before we end. What's the latest book or TV show that's caught your attention and why? It doesn't have to be related to your work. It can be totally for fun, by the way. We like to get to know you. We get some insightful answers.
Oh my God. Ironically, the Bear, yep, I can't cook at all. And my husband forced me to watch this. And I said, I don't want to watch this. I don't like cooking, but it's like pulled me in. Maybe it's because, my husband has a lot of Italian relatives that yell a lot. And, it's like.
If we got any Southside Chicagoans listening, they'll appreciate our shout out to the Bear and a beef sandwich, right? Like you can't quite get enough as Michigander of all of that. If you could have dinner, a historical figure, a contemporary leader, who would you choose? But what's the one question you'd want to ask them as well?
I had the privilege of being at events where Bill Clinton has spoken, maybe 4 or 5 times. He's so brilliant. He's so brilliant, so smart, no notes. I would love to ask him, like, the one thing that we could do to decrease poverty. Like, what is the one thing that's actually achievable? Yeah. Because he's so wise.
Well, I think he knows that listen, poverty is a political game as well, right? Like I think especially in a capitalistic society for us to assume it's not, I think it'd be really interesting to get his take on that for sure about what is achievable to your point, like given where we are currently. Tell us your hobby or activity that's filling you with hope and joy right now. If you didn't have to do this whole working thing, what's the thing that would be taking up all of your time?
Well, I actually did do this for money for a long time, but it's been such a huge part of my life. I was always an athlete. I actually got a swimming scholarship to go to Michigan, which is the only way I could afford to go.
Do you mean I've got a Wolverine on here as a Michigan State Spartan, and I haven't harassed you at all? I feel like I deserve extra credit for allowing a Wolverine on the show today.
Let's see. I would say shortly after grad school, I got into teaching. Back then it was called aerobics. And, I'm 61. I taught nonstop from after grad school until right before the pandemic, when the gym I was teaching at closed. Stopped all the group classes. And I didn't start, I thought, well, this was the only thing that could get me to stop teaching, was that, that the studio was closed, right? But, I'm still going to classes. It makes me feel good. I've had a lot of stress in my life. I've had very stressful jobs, especially when you have to raise money. And that's been my main role for decades. But I think that I love exercise. And now I go and I don't have to go, right? Which is it's like a double-edged sword, right? Like the fact I had to go for so many years allowed me to not have to worry about like gaining weight because I had to go. And now I'm like, oh, well, I can sleep in or whatever. But it also gives me the ability to say, well, today I feel like doing yoga, or today I feel like doing, I don't know, something else. And then you can sort of pick and choose, but there's so many different ways people can exercise. Just find something that makes you happy and gives you joy.
I love it. I love that. I love the idea that maybe if I taught a class, it would force me, because I've been on the other end far too long, Dara. So before we wrap up, Dara, how can people reach you? How can people reach Credit Builders Alliance? How can they learn more? What do you guys have coming up that might be of interest to other folks? Give us all the deets on how they can reach you.
Yeah, so I know you're going to include the URLs, but it's easy to remember ours because it's our name. It's creditbuildersalliance.org. And once you get there, click on the button that says Find a Member. And once you click on that, you can find out the services that our members provide. So you don't have to do this whole, financial stuff on your own. There are many, many, many nonprofits out there that don't charge you anything or charge you very nominal amounts. You can go in for financial coaching and counseling, and you can search through our map, and you can see who offers financial coaching and counseling. You can find out who's in your neighborhood, connect with them, and get people to help you and to guide you, especially if you have very difficult situations and you don't know what to do and you're frozen. It's best to have a impartial person that can help you. If you go to a bankruptcy attorney and you say, what should I do? I mean, that's the only tool in their toolbox. But if you go to an impartial financial coach, they might tell you that bankruptcy is not necessary, and you can get out through going to a credit counseling agency and repaying your debt through one of their programs. So I highly encourage people to go and utilize these services.
There's help. People want to help. And there's hope, which I think is maybe the best thing we can end on, is that there's hope. And let's talk about finances more. I think that's really the critical piece. This old habit we've all had about don't talk about it, keeping it a secret, right? All of those things, the shame and guilt that become associated with that, is that we can talk about it. There's services that want to help. Many of those services are free or low cost, to your point. And so we can keep doing it. Dara, thank you so much for taking time. I know how busy you are, all the things that are happening. So glad that you came on the show, and we hope that you'll join us again in the future.
Great. Thank you. It was a pleasure. I really enjoyed it.
Until next time, for our listeners, please remember, slowly, slowly, we can make the changes together. We'll see you next time. Mindful Management, Creating a Trauma-Informed Work Environment, is brought to you by Chefalo Consulting. To learn more about Chefalo Consulting and our trauma-informed change management and professional development solutions, please visit chefaloconsulting.com. That's Chefalo, CHEFALO, consulting.com. Make sure you don't miss these transformative conversations by subscribing to Mindful Management wherever you get your podcast. Thanks for listening. And remember, change happens one step at a time.